Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start with the Australian dollar, the market once again fails towards that 74-cent level. After posting a high of 74.07, the market retreats rather sharply. With the US non-farm payroll release just around the corner, the markets will likely to be in a bit of a turmoil in the next coming session, along with the expected tariff announcements later today. Trade concerns have been the market's theme over this week, and earlier the Australian retail sales come out slightly better than expected, which did put a little bit of a firmer foot for the Aussie, but still fails towards that 74-cent level. Overall, I'm a seller above there towards 74.60-65 as my broader picture still holds towards 72.55 and reassess from there. Well, the euro found a bit of upward bias after the US returns from Independence Day, but the jitters still linger through the market since the ECB did say, well, some of their members, should I say, did say that the suggested interest rate hike at the end of next year, 2019, was too late. Along with that, we had the FOMC minutes released for June 12-13 gathering in Washington, which highlighted a debate amongst policymakers over how many more rate increases will be needed to keep the economy on a stable footing in the long run. The Federal Reserve officials reaffirmed their commitment to gradually raising the benchmark lending rate amid rising risks from trade battles and emerging market turmoil that could blunt the tailwinds from the fiscal policy. A number of officials said it might soon be appropriate to modify the language in the Fed's post-meeting statement language that describes rates as accommodative, according to the minutes. The summary showed that the central bank was worried that letting the economy run too strong could lead to a significant economic downturn. At the last meeting in June, officials unanimously raised the primary lending rate for the second time in 2018 to a target range of 1.75% to 2%, and lifted their median projection to a total of 4 hikes this year from the 3 estimated in March. Looking at the euro, though, the market is still likely to hesitate towards that level of 117.2030. So therefore, I do expect to see a pullback to 116.45 and eventually down towards the region of 115.5 and to the key support level of 114.85. Well, the dollar yen, after 2 attempts to the downside on that 110.25 level, failed. And with the market responding quite positively, it now turns the focus away from that level and looks back towards the region of 111.10 and reassess from there. The pound overnight gets a little bit of a jitters after reports running in heavily saying that the claims that Germany was unconvinced by the British PM Theresa May that the customs plan post-Brexit. So there still needs to be a little work done there, and still at this stage, I think it's quite clear when it comes to the Brexit at the moment. But what is interesting is that we had Mark Carney speaking overnight, that the Bank of England has come out and said that Donald Trump needs to be warned about the further escalations of US trade disputes around the world, as it could damage America the most. The world's largest economy and China's preparing to launch the opening salvos of the trade wars later today, was speaking hours before the world's two economies prepare for their tariffs upon each other. Mark Carney also went on to say that further escalations would have severe damaging consequences for global GDP. He cautioned that US growth could be hit by as much as 5% compared with a slowdown for the rest of the world of up to half that amount. From the technical outlook, though, I do expect to see the pound re-challenge the top side, with the target still holding around 133 to 134. Dips still a buy from the support of 131.5. At this present stage, I am still bullish for gold, and I still expect to see the market trade up towards 70 to 80 as a potential target. The safe haven demand is still there, and from a technical point, should start finding initial interest. As we have got a couple of signals in place from the rebound of 38, is the market did display a bullish outside range day. So therefore, I do expect to see further demand eventually coming through. Like with silver, since the rebound from 1575, I do expect to see further challenges towards the upside of 1620 as a target and reassess from there. And rounding off with oil, well, the market is clearly back into a bear phase after the market posted a long-legged doji, along with the fact is that we have got an outside range day. So my target is towards $69 to $70 a barrel, with the resistance holding around 73.5. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day and the great start to the weekend as well.